Hi. The insurance game is changing. As technology advances, insurers are able to manage and predict risks instead of suffering the consequences of these risks actually materializing. As wearable devices, smartphone technology, and the fifth industrial revolution reinvents both societies and the risk we face, we as the actuarial society are exposed to the great digital divide. The divide refers to the growing gap between members in society who do not have access to smart devices and those who have. As insurance models are changing, becoming more dependent on risk prevention to ensure affordable cover, those individuals who do not have access to these devices are naturally excluded from these technological efficiencies. As a consequence, this type of digital divide limits the actuarial risk pool of those individuals who are not able to afford new technologies. This is a market inefficiency that needs to be addressed. This risk spans across several actuarial fields. Life and health insurers are increasingly relying on the health indicators of clients based on information gathered through wearable devices. For example, Discovery's lifestyle program Vitality in South Africa have clinically proven the significant health impact of frequent physical exercise on mortality and morbidity risks. A lifestyle program like Vitality relies heavily on wearable devices to verify and measure the level of physical activity an insured client conducted. Members who achieve a higher health status based on these health metrics are then typically rewarded with monetary rewards like cashbacks or other health-related incentives. But individuals who are unable to afford these devices will be unable to benefit from these new advancements and innovations in the actuarial field. It is indeed expensive to be poor. This issue spans broader than just the actuarial field. Data scientists are only as powerful as the data they have access to. Not having sight of the data metrics of lower and middle income individuals who cannot afford these devices will imply that data scientists are only able to serve a small proportion of the population, or even worse, that wrong solutions are implemented for these unknown low and middle income individuals. In order to ensure that all individuals are included in this new innovative and sustainable way of delivering insurance, it is crucial that wearable devices and smartphone technology becomes more affordable and accessible. How may we, as a society, achieve such a mammoth task? A possible solution will be through pricing of data to create a data market. Wearable device or smartphone companies currently own an individual's metrics. But what if these individuals were willing to sell their data points to other companies who may want to send marketing communication or targeted interventions? If an individual agrees to such an agreement, their data will guarantee an income to the wearable device companies, which will put them in a favorable position to sell wearable devices for much cheaper, ultimately increasing the reach of wearable devices to low and middle income individuals as well, and bridging the digital insurance divide. If actuaries and data scientists are able to accurately quantify the value of a data point in monetary terms, a shared value initiative can be created to increase the take-up of these new technological advancements. From an insurance perspective, we as actuaries will be able to create more affordable and innovative insurance products, leveraging the accurate risk rating, larger risk pools, and enhanced risk management capabilities. So, what are we waiting for? Let's create a data market and start pricing.